Good morning. Welcome to Mornings with Michael, where we try to help people make their money work harder than they do on Mornings with Michael. This is for information and educational purposes only. You need to do your own due diligence. Well, here is the heat map, and a lot of tech was kind of mixed. Google was up slightly, Meta was down slightly. Healthcare and biotech was up. Energy was up. Industrials, financials seem to be up. If you're worried about your hard-earned assets trending down when you go into retirement after a lifetime of saving, you might want to look at some alternative investment where you never lose money, where when the stock market goes up, you make money. When the stock market goes down, you don't lose any money. So there, if you want to learn more about that and how you can get a 25 to 50% bonus in your account, just send us a text message and we'd be happy to share more information about that with you. That is all for now. And now let's go back to rest of our screens. Got a new share. I'm going to look at this is the dollar index. The dollar index sold off and tried kind of bouncing between its 50 and 200-day moving average. Take a look at silver. Silver is falling. There's a bunch of gaps below where it is right now. We think it could fill. It's one right here, here, and here. So we think it could slide to about 23. Gold is pulling back as well. Pull back to its 50-day moving average. And copper is falling as well. It did try to bounce. Our favorite copper is Arrow, a mining issue. It looks pretty much like copper index. Let's look at the bond yields. Bond yields did fall to the 50 and bounced. The 20-year gap down and it pretty much stayed pretty flat. So we'll take a look at the VIX and everything else in our PowerPoint. So we'll stop our share right here. Let's zoom over to our PowerPoint presentation for our weekend update. Here it is right here. Syncretism is the amalgamation or attempted amalgamation of different religion, cultures, or schools of thought. And in linguistics, it's merging of different inflectional varieties of a word during the development of a language. The food festival displayed the syncretism of the city's Jamaican and French heritages. So there's our word of the day. So the Wall Street Journal says that the record stock market is riding on questionable AI assumptions. Remember, they said that bulls and were getting all excited about the rally was broadening out beyond the Magnificent Seven stocks. Well, right now, not so much. The NVIDIA AI spiderweb is right before us. Since we're speaking of AI, may want to take a shot of this and do some investigation. Semiconductor equipment, utility power solutions, copper fiber optics, which we go over every day because we really feel copper is going to rise on all this AI and data center, memory, servers, networking, electrical components, semiconductors, software, heat management, cooling, data storage, and we're back at semiconductor equipment. So go away in May is what the old saying. I don't think it really applies anymore. But if you went away and you believe in that fallacy, Well, you would have missed a big run up in the NASDAQ. The NASDAQ has been a big leader in the month of May. And now we're on to power trend. We're going to look at power trends, gap ups, then the market, and kind of risk to the economy. So that's what we got in store for the rest of the PowerPoint. What is a PowerPoint power trend? It is a market analysis strategy that is part of Market School developed by Investors Business Daily. It is not a buy signal. The follow through day is a buy signal to get in the market. It is kind of a signal to accelerate, put on more risk, so to speak, as the market continues to go up. It is a strategy designed to identify unusual strength in the market. Once again, you need to find out if this is right for you, but I just want to share the education so you're aware of it. A power trend starts when these four things take place simultaneously on a major market index. The low is above the 21-day exponential market average for at least 10 days. The 21-day exponential market average is above the 50-day simple moving average. The 50-day line is in an uptrend, and 1 day is sufficient. The market closes up for the day. A power trend cannot start on a down day. So that's what encompasses a power trend, and it usually ends when the 21-day crosses down below the 50-day. Let's take a look at a recent power trend. This is in 2020 mini bear market. April 6th was a follow through day. A couple weeks later, 2 to 3 weeks later, power trend was set up. Why did it take so long? Well, the 50-day was trending down, went flat, and then when it went up, that's when the power trend went on, because the 10-day and the 20-day were already aligned. The 10-day was above the 20-day, which is this kind of pink line, then the green line, and then the red line. And after the power trend went on, the market went below the 20-day here, and here. You may want to start to lighten up if you had turned on the accelerator. And when the market really came down to the 50-day line, this is where the power trend ended. On to news. How do you handle news when you're investing in the market? These are some of the headlines. AI in the tech sector is the market. What's the Fed going to do with interest rates? They say they're going to, many people are expecting 7 rate cuts this year, may end up with 0. We're in an election year. There's geopolitical risk, and rise of commodities equals inflation, or does it? Well, this is what William O'Neill, the founder of Investors Business Daily, had to say on page 384 on how to make money in stocks. When news of consequence hits the street about the U.S. economy, our government, foreign countries, or international events, the capable tape sleuths are sometimes less concerned with whether the news is good or bad, that they are analyzing the news effect on the market. So it's trend lines over headlines that matter. On to gaps, breaking away gaps. What is this? When a stock gaps up strongly in price and it rises past the proper buy point, the unusual power signal upside is likely the beginning of a monster run. The breakaway gap is an unusually strong breakout from a sound base. It demonstrates a powerful demand that should not disqualify the stock for purchase. It just means you must adjust the buy zone to 7% from your initiation price. Breakaway gaps are typically news-driven or triggered by earnings releases. Where can you find breakaway gaps? In a breakaway gap report, earnings gap up, or up on volume screen. Breakaway gaps. This is NVIDIA. It had two such breakaway gaps on its latest earnings report, which was incredibly powerful. We got the gap here, and it trended for 2 days, and then it gapped up again. And it has started to pull back a little bit, but that is the gap up. And this is what it looked like on the 5-minute chart. What we did, we looked for the earnings report, and after it came out, we added to it after hours. We didn't add a whole lot, but we added some, and it has paid off. So it moved up here, pulled back a little bit, and then the following day, it broke out again, and then it has risen here. As like I said before, it has pulled back slightly. Here's a breakaway gap in Abercrombie and Fitch. We have kind of a reverse look at the costs. One of the other shop stores that has not done as well in selling their goods as Abercrombie and Fitch. But look at this. If you had bought the first 5 minutes, first 10 minutes, you would have been sitting pretty. So now we move on to our section looking at the indexes. So this is Dow Jones Industrial Average has been heading down recently. When we look back over here, this is a bearish kind of symbol here, candle, and then we saw it break down to I believe this is a 21-day moving average and fall below it. And once it was support, turns to resistance. It broke that resistance and climbed up. So you had tried to break through and pulled back and then broke through. And now it seems to be repeating that same kind of chart pattern that we saw earlier. It did come down to, or we figured it would come down. I believe that's 379.41, 379.61. And it's going to bounce. It may bounce up here to the resistance line now, and then we think it's going to pull back. As you can see, volume was pretty heavy, and here we got a turn on the stochastics and a turn on the CCI. So here's the IWM or small caps. Got a gap up here, move up here. I think it can move up a little further, and then we feel that it's going to come back and fill this gap. And then we got another gap over here. This is why we think it could pull back to 199.95. Gaps tend to be price magnets, pull back, and then return to the trend. And now we want to move on to the NASDAQ. The QQQ had a powerful bullish reversal, came way off this lows here and moved up here. I think it can continue up here. Got support here at a support line, this 21-day average, and then we think it's going to come back down. So we talked a little bit about ABCD. This is A coming down to B, and any move up here would be C, and the move down to this line would be D. So we'll continue with that ABCD pattern. Here's the S&P 500. Once again, this is very similar to Dow Jones. Previous line, we think a very similar thing is going to happen to the S&P. So we had a gap right over here. This gap has been filled. We think this is a bullish reversal, as we said, similar to the NASDAQ. I think it's going to come up here. It may even attempt to break out from these previous levels, and then we think it's going to turn tail. We got a gap right here, and we got a gap right here, and that is what's going on the S&P 500. We just found this on Twitter or on X. The S&P is lagging now, and you can just see this. Now this is a Dow, which we said we think is kind of mirroring what the S&P 500 could do. It's come back up here like the Dow did and retraced. I think this could retrace as very similarly to the Dow and then bounce up again. So this would be A to B to C to D. Right now we got A, B, C, and then we came down to D, and we'd start all over again. So that's where we think we are. Here's the VIX, or the volatility index. Right here we got the A, down here pivoted to the B and came down to the C, and we think it could go up to the D to 1838. So we got this gap right here has filled. It's an oscillating index, so 99.95% of the time it fills those gaps. And that is the story with the VIX. Here's a troubling sign for the economy. With interest rates high, banks who bought bonds before and they're losing money on those bonds. The Fed is going to let them hold these to maturity. But if they're losing money over here, they're going to have less money to loan out to small businesses. So we think that that could really show up later in the year and really hurt those small businesses. What businesses currently have been hurt? Well, let's take a look at the charts. $60 billion in market cap, gone overnight. In one day, the stock gave back a year's worth of gains. But if you're a market technician, what happens when you come under the market averages? Nothing really good comes, because it's going to take a lot of power to power through this, which has become resistance. Up here has been support, and now it's starting to become resistance. And a gap down over here, another gap down here, huge volume, and all the indicators, the stochastics and the CCI are pointing down. Moving on to Intel. Intel hasn't been able to regain its strength in the semiconductor maker. It tried to move up, and then it fell down below the moving average, tried to pop up, and didn't make it very far, and it fell down again. This looks like a head and shoulders pattern, left shoulder, head, and then here's a right shoulder, and it is just, and here's another head and shoulders pattern right here. Left shoulder, head, and right shoulder rolls over. And this is a great bearish signal that tends to happen over and over again. In 3 months, it erased all of its gains for 2024. Wasn't a lot of red volume up here, but it just happened over and over again. Like they say, if it doesn't scare you out, it will wear you out. And Intel is really wearing them out. On to the next one. Retail, which did not follow Abercrombie and Fitch's results. Kohl's should really check in with Abercrombie and Fitch and see how they're able to beat their sales record, because Kohl's is just rolling over. Their sales and marketing results did not work. And the chart kind of revealed that. It could not move higher here, kept wanting to go below the support, rode the support up here, and then just kind of rolled over. And this right here, to me, kind of looks like head and shoulders. This is the left shoulder, head, and here's the right shoulder. Try to move up, and then boom, all that money is gone. No light look at McDonald's. Iconic symbol here. The chart pattern is starting to resemble this one trader feels. So that is our little levity on the chart. We'll stop the share. Let's go back to our screens. Penn is another big riser, up big time on Friday, up nearly 20%. See if it can retrace a little bit, get back to the winning angle. I don't think, I'm not sure if that would be buyable. I wouldn't recommend it, although it is getting above the 50-day moving average. Caesar Stone, or actually Caesar's Entertainment. It's interesting too. People that are in the gambling arena were up big time on Friday. Speaking of gap ups, the Gap is kind of following Abercrombie and Fitch. Their sales were up, earnings were up 1,000%. They went up 28% on Friday. What are some of the other winners? CRH manufactures cement, asphalt, and building products, trying to work their way up out of some consolidation, out of the box, Darvis box symbol. That did not work out so well. Sarepta Therapeutics up 4.35%. Huge volume over here, but I would kind of wait for a better entry, although it has gapped up. It looks like it's gapped up 3 days in a row. The gap we looked at, American Semiconductor, was up nearly 10%, 290% increase in volume. Right over here, when it broke out, here was the first day, followed through. Next day, pulled back quite a bit, and then bounced right back. And here is the earnings, and it really gapped up on that earnings. Vertex Pharmaceuticals up 2.8%. I would say this would be actionable. Broke out here, developed a handle, nice cup with a handle, and it is breaking back into the pivot, up nearly 3%. Heiko Corporation in aerospace and defense, kind of breaking out here. Show you some others in the group seem to be doing well. This is, we have in another portfolio we manage, gap down, fill in the gap, up 3.7%. This is something we have in our portfolio, AVAV, drone maker, and it's been doing pretty well. It went from, we got in at 180. We actually bought the 165 to 175, and the 175, we decided not to roll it over, just take our profit and just buy the shares. We just bought the shares at 180, and we've been riding it up ever since. And Howmet, also in the aerospace defense area. This is, we bought right over here, and it is in the profit zone right now. So that's the aerospace defense area. Health equity was up 3.24%, working on the right side of the base. If you just draw the line, as Mr. David Ryan has said, you could get in as an entry here. And if you wanted to follow on buy, if it cleared this area, you could add to it. So that is the story there with health equity. And finally, we're going to look at Monday. software really sold off. Monday had broken out and fallen back down. Maybe this is a handle. See if it can come back to the buy area. We can take a look at the software sector. I think that is a wrong symbol. It's financial services. Well, let's look at XLK and we'll come back to the software ETF. See, we got technology bounced off of the 50-day moving average. IGV is a software. Look at this big sell-off. Try to come back up and then just turn tail right again. CRM we looked at in our PowerPoint. Yeah, that didn't help matters much. Let's look at a couple other under the covers of the S&P 500. Got a bounce in financials. Got a bounce in the energy sector. Kind of got to the lower. This looks like it is descending base right here. Oil prices were declining as well. Not sure what's going on. That's declining. Take a look at the semiconductor index. They bounced off the 20-day moving average. I believe this is in the last hour of trading. Home builders. Home builders bounced a little bit on the pullback in the yields. Got a little bit of a bounce there. And metals and mining. Got a little bit of a bounce there. It pulled back to the 20-day, and they've been kind of riding up a little higher ever since then. And building materials, we got a bounce there. So that is the story there. We looked at everything over on that angle. Let's see what we're currently trading. ELF, we felt like this is going to do better than people were anticipating. So we bought the 160 call options, 5 of them, and it has bounced. Right now it looks like it's trying to build a cup with a handle. So that's a story with ELF. Bros. Dutch Brothers Coffee. Let's see if we can get that to open up here. We bought it right over here, up, continued up, and we put our stop loss right about in here and hit our stop loss. And then on this pullback and bounce, we put it in and we bought 300 shares, and we also bought the $36 option. So that's with Dutch Brothers. We think they're going to continue to grow because they're only in Northern California. They still got Southern California to build out. And let's just compare them to Kava, Mediterranean Grill. They're kind of hitting on all cylinders. We originally bought them on the IPO base. On the IPO base, they broke out. We kind of called it on our show, and they were at 42, said this was going to go up. And 2 days later, JP Morgan agreed with us and put a $49 price hike. And then we called them when it was going to fail. And it failed and went down from 52 to 29. From then on, when it broke out, we at around 31, 32, we said this is going to be a breakout. And we've been trading in them ever since. So let's just take a look at Toast. This is also in the restaurant. Many restaurants are doing well right now. We did have them. We put in stop right around the 20-day line right below it. And we bought on this, bought right over here, the options right before the gap up, bought it, and it gapped up again. So we had a nice move. We think this is still going to continue to be a good place to be. So we put it in the $24 call options, and we'll see how that works out. In uranium, we have Denison Mines. We first bought this at 85 cents a couple years ago. Then we recently bought them for $1.19. Just been writing this in another account, and then I put this in my account, 189. 189 when it went up to 215 and came back to 205. I believe we sold it there. It was between 2 and 205. We sold it. We got back in 194. It tried to break out here, pulled back. So this is a base on base. And now it is breaking out. We put a covered call on here at 250. And that expires in July. So we'll just have to see how we manage that. Last week, on Thursday, we got out of MicroStrategy at 1600. I think it kind of rolled over because of the software sell-off. So we sold them at 1600. Went up to 1700 and pulled back to 1600. We sold. And then it just continued rolling over. It went down to 1450. And then when we saw the bounce after the 50-day, we decided to get back in at 1480. Moved up to 1524, and we'll just have to wait and see how these things move. We'll try to bring up our cryptocurrency, see how they're been doing over the weekend. There's IPO in aerospace. We got in on last Thursday, right about 54, maybe 54.50. Just like this move, came up here, pulled back, and is bouncing like the earnings estimates. There's 4 companies that NVIDIA is investing in. Just another look at NVIDIA. We had them in our PowerPoint. Pull back. This is the second gap up, but it pulled back and bounced, get near where their second gap up was. There's 4 companies NVIDIA is investing in, and we decided to invest in the robotics company, robots that deliver your food. And we got in 3. And we bought some more a little lower, so average price is 288. Yahoo said there's estimates out there for 1-year price target at 48. So we'll see if we can remain in this one and see if it'll go up to 48. We also like 4. Shift 4 payments. It's doing about call option at 62.50. It is doing all the credit card processing for the hotels. They were up 2.53% on Friday. Just going down the list. NetApp was in the NVIDIA Spiderweb. Bought them at 110. Continue to hold them. They were up 3.37% on Friday. We looked at AV. Crowd looked like it was going to be successful. We put on the 320 call and went up to 350. And then when all the software sold off, it sold off as well. And we finally got a bounce. And so we're just going to, I think, hold it on to earnings and see where this goes. And let me see if there's anything else. I think that pretty much covers it on what we're currently doing. So that will wrap it up for the weekend update. This has been Mornings with Michael for information and educational purposes only. Hope everybody has a great weekend. Keep working on your goals. And if you have any financial goals we could help you with, please let us know. We'd be glad to help. In the meantime, have a great week, and we'll see you guys at the top.